Hi, everyone. My name is Bob Jablonsky. I'm an enrolled agent. My firm's Bob Jablonsky and Associates. We are located in Richardson, Texas, right outside of Dallas. And today I want to talk a little bit about canceled debt. Is it taxable or is it excludable for income from income? So canceled debt is, you've gotten a loan. Typically, it's going to be from a lender, a bank, or another lender, and they for whatever reason either completely forgive the debt or they discharge it for less than the full amount. They modify it, and you no longer owe the full amount. And in general, when that happens, the income canceled is income. It's the lender will send a form 1099-C to the borrower, and the borrower who had the debt forgiven will list it as income on form 1040 as other income. So there are a few situations where canceled debt is excludable from income. And I've taken this list right from the IRS, tax topic 431. So debt canceled in a Title 11 bankruptcy case. So you've gone through bankruptcy, it was forgiven, and in that case, it's excludable if it was forgiven in bankruptcy. If it was canceled during insolvency, and that means basically you look at your personal balance sheet, you go through a calculation, and what was your assets, what were your liabilities, what was your ability to pay that debt, and up to the amount of your insolvency, it is excludable. That one gets a little more complicated. Cancellation of certain qualified farm indebtedness, cancellation of qualified real property business indebtedness, and then cancellation of qualified principal indebtedness that is discharged subject to an arrangement that is entered into and evidenced in writing before January 1st, 2018. This is where I've seen most of it in the past. It's related to mortgages and real estate debt, principal residence. Most of the people that I've worked with and have had this, that's been the situation. I have worked with people who have bankruptcy cases or who were insolvent, and it was forgiven for those reasons as well. So what do you do? How does a taxpayer identify the amount that's excludable? Well, there's a Form 982 that is that would be part of the tax return that's filed. I don't go into it here, but you also have to look at there are certain situations where it may impact the basis, like of the real estate that you own. If certain amounts would be excludable, it may impact your basis in that property. You'll file it with the Form 1040 where you identified the income. So you're going to have the income and it's going to be excluded. And the amount on the 982 that's excluded is going to flow right to your tax return. And the impact will be on that amount that is excluded. You will not pay income tax. I hope this was helpful, at least as an overview of what's going to, of what you would do and what the impact is. It could get a little more complex. If that's something we can help with, I'd be happy to help you. My name's Bob Jablonsky. My phone number is 972-821-1991, and my email is bob@jablonskyandAssociates.com. Thank you all for listening today, and I hope you have a great day.